You're doing $2 million a year in revenue, but every month you are still wondering how you're going to make payroll. Here's the truth. Your problem isn't number of leads. It isn't more revenue. It is your pricing. More specifically, it's your margins. No matter what, if you do not have positive cash flow right now, more revenue will not solve your problem. I am Paul Maskill, founder of Blue Collar Business Advisors, a fractional CFO for home service companies doing $2 million to $20 million in revenue. And in this video, I'm going to show you how to fix your pricing so cash flow finally works in your favor. So what is the number one reason your $2 million, $3 million, $4 million home service business is broke? It is not your revenue. If we are just measuring the top line, we will never achieve success because I don't care how much money you do at the top. What I care about is how much money is left over at the bottom. Revenue is simply a false indicator of success, usually for a couple of reasons. One, our ego. We like to tell people we do $1 million a year or we do $5 million a year. We're on our way to $10 million a year. That's the number one reason, to be honest, is our ego. That's what we want to tell other people we do. We want to tell them how many trucks we have, how many of our guys, my guys that are working, all the things that go along with that. And the second reason is usually because most business owners aren't sophisticated enough to actually tell other people what their profit is, or they're not comfortable talking about profit. They're going to say, oh, I'm just reinvesting in my business, so I'm not really making much money yet, even though I'm doing $2, $3, $4, $5 million in revenue. So what is actually causing that? And then more importantly, how do we solve that? So money in the bank does not equal profits. I've went over this in my podcast before. If you haven't subscribed to the podcast, check it out, Blue Collar Prosperity Podcast. But cash flow is driven by margins, not how much money we bring in at the top. If you think about this as a bucket or a funnel, I don't care how much money is going into the top. I want to know how much money is left over. So if it's a funnel, how much money is actually making it into where we actually want to go? Where are the holes? Where are the leaks? And that's where our margins come in. And that's really what we focus on when it comes to driving profit. So think of this real quick. The average home service company that I have looked at over the last, call it 18 months. So when people want to work with me, I do a financial assessment for them initially. It's completely free. It really gives me a good idea of what's going on in their business, what's working, what's not working, where are the areas of opportunity, where are the big red flags. And over the last 18 months, the average net profit is 3.79%. That is less than 4%. So if you look at a $5 million business, if they're only making 3%, that means they're doing all this work for $150,000. Now, flip that to a $2 million business that's hitting our targets. Our targets are 15 to 20% net profit. So say we're even at 15%. If we're doing $2 million in revenue, but we're at 15%, that is a lot more money. That's actually twice as much money. Bottom line, that's $300,000 compared to the $150,000, even though we're doing way less work. We're doing $2 million worth of work instead of $5 million worth of work. So here's the thing. I don't care what your top line is. If you're at $2 million and you're not profitable, you will never get to 5 million. If you do, you will be miserable the entire time. That is one of the many dangers of chasing revenue. If we are just chasing revenue for the sake of chasing revenue, we are going to be miserable. We're going to be burned out, and we're never going to achieve the goals that we set out when we first started our business. So I want you to think back of when you started your business or when you acquired your business, depending on how you got started, whether you started it from scratch or you acquired it. You had this vision of what would life look like. If I had to guess, it's probably a little bit different than where you're at right now. You had visions of freedom, of time, of wealth, of prosperity, of making money, of building a team, not being in the business, not working 24/7, all those things. And then what I see happen is we keep going, telling ourselves, well, more revenue will solve that problem. If I just get to 2 million, if I just get to 3 million, if I just get to 4 million. Where most people reach out to me is when they've hit that breaking point. I keep doing more revenue, but I don't have any more money in the bank. I'm working harder than ever. I'm more stressed than ever. Why is that? So let's go into why that is. And it comes down to our margins. It comes down to our pricing. So I'm going to go over some KPIs, some basic high-level margins of where we need to be on average for the home service, home improvement industry. Again, these are averages. It's not specifically for your business. If you want me to dive into it for your business, please let me know. Reach out. You can go to the website. You can click down below. But where do we need to be and why are we stuck in the first place? The reason we are stuck is we are not pricing accordingly to what our business is today. So when you started your business, you priced it more often than not of how much money do I need to make in a day, in a week, in a month, in a year in order to enjoy my life. I used to work at this company. They paid me $80,000. So if I just make $100,000 a year, I'm pumped. So I just need to make $2,000 a week and I'm going to be pumped. And then we achieve that. And then we bring on an apprentice, and then we bring on somebody to answer the phone, and then we bring on our first technician, and then we bring on a second technician, and then we bring on somebody else. And all of a sudden, we're at $2 to $4 million, and we've got a bunch of technicians, we've got people in the office, but we're not making any money. And going back to why, we're not pricing accordingly. We're not factoring in all the cost it takes to deliver our promise. So when you started your business, you had an idea of these are the core values we are going to operate on. We're going to show up on time. We're going to do great work. We're going to answer the phone. We're going to do all the things that most people don't do in the trades. And you do that. But now all of a sudden you can't do all of that by yourself. And there is a cost to building that team. So we're building that team. We're building the infrastructure. We're putting the jobbers and the service titans and the house call pros in place. We're putting a dispatcher in place. We're getting the vehicles. We're doing all the things. We've got material. We got supplies, all of that stuff. There is a cost associated to it. The other cost associated to this, when we're going to kind of dive into pricing here a little bit high level, but is our labor efficiency. If we're paying our people hourly, how many hours are they actually working? Are we charging accordingly for that? So let's break into this high level and we'll go a bit into the weeds a little bit. So that way you have some takeaways for this. So like I said, pricing and more specifically, all of the margins are the reasons we don't have any money. We don't have any profit, even though we're doing several $1 million. Rule number one, please stop convincing yourself that you are reinvesting back into your business. If you are not making money right now, you're reinvesting into an asset that is worthless. So please stop convincing yourself that you're doing that. So that's what I want to kind of get through your head first. If you are reinvesting in your business, you should be able to tell me exactly how much money you put in, what vehicle it went in, not necessarily a driving vehicle, but did you put it into marketing? Did you put it into a person? Did you put it into a vehicle? What did you put it into? And then what was the return on that? Otherwise, if there was no return and you can't measure it, there was no investment. So let's get that out of the way. So where do we need to be in order to be profitable? In my opinion, we need to be at 15 to 20% net profit. You can listen to other people. Oh, I'm at 25. Oh, I'm at 27. I'm here. I'm there. I'm here to tell you over the last 70 companies I looked at, the average, they're doing about 4.5 million in revenue and they are at 3.79% net profit. So don't believe everything you hear online, on podcasts, on social media from the gurus, all of that stuff. We need to be at 15 to 20% net profit. That means if we bring in $2 million, let's just use 20% for example's sake. We need to have $400,000 on our bottom line. Now, where does the other 80% go? That's what we're going to get into. So if we start with $2 million, our gross profit needs to be at least 50% for the majority of home service companies. If you're doing more home improvement stuff, bigger tickets, construction projects, it's probably going to be lower. But we need to be, let's just use example sake, we need to be at least at 50%. So what does that mean? Our cost of goods sold needs to be 50%. Which means our gross profit needs to be 50%. What goes into cost of goods sold? The two biggest is all the people out in the field delivering your work. Subcontractors, field labor, their payroll tax, their workers' comp, their paid vacation, their health insurance, all of the things that go into employing people out in the field, the cost of hiring those people. That's the big one. And then material and equipment's the other big one. That makes up most of your cost of goods sold. Some other miscellaneous things in there could be things like equipment rental, things like permits, if you're pulling permits with your local municipality to do the job that you need to do. But overall, two main things that cost of goods sold, if you get this right, you're better than most because most companies don't have their books set up this way, is field labor, all the people out in the field delivering the work, selling the work that you are delivering to the world out there, and then the material and equipment that go along with it. So if we take $2 million revenue, then we should have $1 million that goes to pay all that stuff. And we have $1 million left over. Now, what do we do with that $1 million? It's going to go into three main buckets. Number one is marketing. What are we going to spend on marketing? Number two is office payroll. So all the people in the office, your pay as well as the owner, assuming you're not in the field delivering work. And then your overhead. Your overhead is going to be vehicles. It's going to be rent. It's going to be software. It's going to be all the things that we have to pay regardless of our business operations. It's kind of our fixed costs. So those three things, marketing, overhead, and office payroll. Where do we need to be? Marketing, the bigger you get, the better the brand you build. It could be lower and lower, but I'm gonna use a 8 to 12% range. Our marketing needs to be in the 8 to 12% range. Our office payroll needs to be in the 10 to 12% range. And our overhead needs to be in the 10 to 15% range, depending on where you're at with business size and scaling up all that. So if you notice, all three of those have 10 within them, 8 to 12, 10 to 12, 10 to 15. So let's use 10% as an example, a super simple example to get us to 20%. So if we have 50% left over from our gross profit, from our cost of goods sold to gross profit, we got $1 million left over. Then 10% needs to go to marketing, 10% to office payroll, and 10% to our overhead. 10% of 2 million is 200,000. So that means 200,000 for marketing, 200,000 for office payroll, 200,000 for overhead, leaves us at the bottom 20%, which is that 400,000. That's what we need to focus on. We need to have targets for all of those things. And then when we see we have the targets, then we need to look at where are we at year to date, and then where were we at last year? Where did we finish? And then where are we trending to be? Are we headed in the right direction or the wrong direction? Once you have those simple, basic benchmarks, you will then know what is broken in your business and why you are not making money. Again, solving those does not mean more revenue. More revenue is not going to solve your gross profit problem. More revenue is not going to solve your marketing problem. More revenue is not going to solve your office payroll problem. More revenue is not going to solve your overhead problem. Yes, it can to a certain extent. However, if you're not making money on that, going back to pricing, there will not be enough money to pay your overhead or to pay your office payroll or anything like that. So that's what we need to focus on. Wrapping this video up, couple bonus things you can look at is how do we make our labor more efficient? How do we make it better? Things you can look at is performance pay. If you go and look at all of our podcasts and all our videos, there are things on performance pay, but as companies grow, most of them switch to performance pay. The reason for that is it fixes your cost of goods sold. No matter what, our labor rate is going to be, let's call it 25%. We know we're going to be 25% towards labor no matter what, versus if you're paying hourly and they're not efficient, your labor is going to go through the roof. So no matter what you charge, it could still get out of whack. Or if you look at where your labor is at right now, the price you have to pay, the price you have to charge in order to pay your people might not be aligned as well. So that's a little bit bonus. I'm not going to get into it in this video. We're already at, call it the 12, 13 minute mark. But that is why your $2, $3, $4 million a year business is not making money. And that is why more money will not solve the problem. It's just going to make the current problem bigger, which means when you do have a bad month, you're going to go further into debt and you'll never be able to solve that problem. So recapping it all, the number one reason your $2, $3, $4 million home service business is broke, it is not revenue. Revenue is a false indicator. It's just the top line. It does not tell us how successful we are. What tells us how successful we are is how much money is in the bank when it's all said and done. If we bring in $2 million up top, how much money do we have when it's all said and done? Ideally, we have 20%. Those margins, again, ballpark where they need to be. We need to have 50% gross profit. We need to have 10% marketing, 10% overhead, 10% office payroll. Now, depending on your setup, those 10% might be a little bit different. Maybe marketing's only 8% and overhead's 12%. But all in, if those three things add up to 30% and you're at 50% gross profit, you will hit 20% net profit. So that's it. That's all I got for you guys for this video. If you want to reach out, please let me know. You can go to the bluecollaradvisors.com, go there, schedule a call. You can also click the link below, subscribe to the videos, check out the podcast, the Blue Collar Prosperity Podcast, and we will chat with you guys soon.